from a valuation standpoint, we raised like $75,000 on the front end from a few angel investors. And let me put it this way, we were able to pay them all back. You don't want to give away your business and have other people telling you what to do. If your goal is to really just make a living for yourself and for your family, don't raise money. But hey, if you want to grow this idea or this product into a large business or a mid-sized business where you have more employees and you're expanding and you're growing,
Right.
in that case, yeah, you might want to consider what it looks like to raise money. So.
Welcome to the Mayank Show, Blake. For those who don't know Blake is previously co-founder of APay Financial, which was an application regarding student loans. I think Blake will be talking more about that. And currently, Blake is working with the company which acquired his product in 2021. The company is called Ramsey Solutions, and he's working as a product manager over there. So, Blake, would you mind telling my audience more about yourself?
Yeah, certainly. And thank you for having me on your show. Yeah, I'm a big fan of the work that you do. I know we have some mutual connections. So it's great to be here. But yeah, you kind of mentioned in 2019, I started my first company called APay Financial. The product was designed to be a personal finance tool that helped people with student loans. And so, so here in the United States, student loans is a big issue that a lot of people deal with on a day-to-day basis. And we kind of found that there was a problem that we could offer a solution for in terms of helping people better manage their student loans. And so, yeah, we built out a personal finance tool, mobile first, that was geared to really alleviate some of the pain that people found with dealing with student loans. And like you mentioned, we started that in 2019, and then in 2021 we got acquired by Ramsey Solutions, and that's where I'm at now. I work as a product manager. I oversee our Every Dollar team. So Every Dollar is a budgeting app that Ramsey Solutions offers, and I lead a mid-sized team that's responsible for that product. So yeah.
That's awesome. I mean, whenever it comes to entrepreneurship, you get me there, and you will be seeing me asking a lot of questions to that person. I think that is the base reason today why I invited you to the show, and you were kind enough to accept my invitation. Thanks so much for that. Like when I heard that you started your very first company, a lot of questions come to somebody's mind who is curious into this space of entrepreneurship. So one of those questions was that how did you come up with this idea, and how did you turn it into the reality? Because most of the time you will find people who only discuss ideas, but it's rare that they convert that idea into an actual product, right? So how was the journey from the ideation of APay to the reality of it?
Yeah, that's a great question, and I appreciate you asking me that. So, I guess to go back a little bit further, my background is in banking or in finance. I worked for Bank of America for about 5 years in the data management space, and so the team that I led at Bank of America was responsible for different aspects of data warehousing, data lineage, data regulation, things like that. And so I was very much in the finance space prior to starting APay. And it was something that me and my wife had personally. We had student loans that we dealt with. And one of the things that we kind of noticed was, hey, we have several different loans from multiple different providers. And it seemed like it was just all over the place, different types of payments and payment plans and due dates and interest rates. And the list just goes on and on and on. And we were looking for some type of personal tool that would help us better get on track with our student loans, right? And what we found is that, like a lot of people, you end up managing all of that chaos in an Excel spreadsheet, right? And working in finance, technology finance myself, I thought surely there is a better solution out there. And there were a few different products that were available in the marketplace, but there wasn't anything that we felt really addressed the problem that we were experiencing ourselves. And kind of to your point, you mentioned that there's a lot of people that have ideas, but not
Right.
so many people that execute those in terms of starting a business. And really, the way that I look at that is that you have makers, people that like to make things, and then you have people that like to solve problems, right? And
Mm.
so
Okay.
usually, there can be some overlap there. But a lot of times when people come to me and they say, "Hey, I want to start a business, can you give me some advice?" One of the first things that I like to ask them is like, "What's your goal?" Right? Is your goal to simply build a product? Like you just have this desire to build something because it's something that you're interested in, or are you looking to solve a problem? And for us with APay, we saw that there was a problem in the marketplace, and really what that problem was is that millions of people were struggling to manage effectively their student loans, and we felt like, hey, we can put the pieces together to provide a solution for that problem. And thankfully, we were able to raise a little bit of startup money. So we raised a first round from a few angel investors that kind of helped us get started. And then
Okay.
from there, we built out a beta and then an MVP, and then we went to market. We launched the product in January of 2020 because we started in 2019. We closed our first round of funding in May of 2019. We launched.
Awesome.
It took us several months to launch, but there was a lot of learning in there. We
Okay.
we
Okay.
launched in January of 2020, and then we sold in September of 2021. So
2021. Okay. But when you come up with an idea and you want to execute that, um, I don't know like on which basis this angel investing business like runs, but can you get more into the details of it? Like on which basis can somebody land their angel investment if they need it in the very beginning of their entrepreneurship career, where they are building their very first product, or not just very first product. I think whenever they are building something and they need some amount of financial help with that. So, how does anyone apply for it? What is the criteria to get through it? And like, what are the like parameters to take care of when you are looking for an angel investor?
yeah, that's another really good question, and it's hard to answer because it there's a lot of factors that come into play. One thing that I'll mention, I got told no probably 1,000 times. So
Okay.
many people heard the word student loans and they were like, no, that's not a business that I want to be invested in.
Right.
But after several conversations and just continuing to refine kind of the problem that we were solving and the solution that we were going to plan to go after, we were lucky enough to find, I think it was 3 or 4 angel investors that believed in us enough, that were willing to write us some checks. And so one of the things that I'll kind of say is that if you're going out to solve a problem with a huge addressable market,
Mm-hmm.
then you're potentially in the realm for should consider raising money. If your goal is to build a product and kind of in isolation, meaning like, hey, I want to build the next Wordle,
Okay.
or I want to build, whatever it may be, I would consider going the bootstrapping route.
Right.
Um, and so, as an example, while we're here at Ramsey, my co-founder and I, we built a project on the side called Compound Journal, and I'm sure we'll talk about that later.
Yeah.
But this is one of those projects that are totally on the side, and so it really fits the mold for a bootstrapped product. Um,
Right.
yeah, and so it's kind of distinguishing like, hey, what are the goals that I have for this project? And if it's something where you're trying to start a business and you have to go fast, and to go fast, you need to hire additional resources, and the criticality behind each of the reason that you need to go fast and the reason why you need to bring on more resources, that kind of starts to lead you to understand, hey, I should probably raise money for this. Whereas again, if it's a side project and you're like, hey, I'd love to make $200 or $300 a month, with my project.
Just a passive income or something, then that's a different approach itself, right?
Exactly. Yep.
Okay, that's great. I mean, and like I asked you the question, like how can somebody apply for it, but I didn't ask you like, can you simplify angel investment for the audience, because I don't think that many people know about this term, because in the word of investment itself, you have a lot of terminologies. So out of which we are talking about angel investment right now. So can you just simplify that word for the audience?
Yeah, sure. So when you think about angel investing, it's usually done in the early stages of starting a business. A lot of times you think about being either pre-revenue or pre-product. And so oftentimes angel investors are investing in your company at a stage that's so early. And it's kind of like where the term comes from. It's like they're an angel, right? It's like, this is incredible. Yeah, it's kind of a joke, but the reality is, you're probably before even you're raising a seed round. So you think about at the early stage of a company, you might raise a seed round and then a Series A and a Series B and so forth. Angel investors are typically investing at the early seed round, if that makes sense.
When you haven't proved the idea, or when you haven't pushed your product in the market, right? Like right before that.
Yeah, very, very much so. And it all kind of just, it'll vary, right? Sometimes it'll be at that stage. And then other times you might build an MVP and start to kind of build out that go-to-market strategy and determine if you have product market fit. And then at that point, you might choose, hey, I want to raise a seed round and bring on some angel investors. So it kind of just depends, honestly.
All right. Getting into more details on APay, I'd like to ask you, like, how is that solving the problem of student loan? Like you told me that it's basically addressing that particular problem. So how is it solving that, or how is it at least helping people with that?
Well, let me break it down this way. There's three main things that we wanted to provide our users when they came to our product. We wanted to help them understand, number one, understand their student loans, give them an easy way to keep track of their student loans. Yeah. And I'll explain a little bit more about that here in a minute. And then the last thing is we want to help them save money. So three things: understand, track, and save. And the reason why that's important is because a lot of people just simply don't understand all of the financial dynamics that go into student loans, right? A lot of people take out their student loans when they're 17, 18, 19 years old, and they really have no idea what they're doing. But when they graduate, all of a sudden they have this huge financial burden. They don't really understand what to do. So number one, we want to help you understand. So we make that really easy by we brought in your student loans into the application, and then we surface the most important information and kind of walk you through how you can best manage your student loans. So that's number one, understand. And then yeah, very much so. Educating them, financial literacy, so forth. The second part of that is tracking. Tracking your student loans is so hard, and I'm going to tell you why. So many people graduate university, especially in the United States, with loans from multiple different providers. I think when my wife graduated, she had 5 loans from 5 different providers. And to just be able to track all of that in one place is a value in of itself, right?
I see. Okay.
And so we have understand, we have track. So we sync your student loans to the app and you can manage it all there. And then the last thing is save money. And so the way that we help you save money is by running different types of analysis and scenarios on your data to help you understand, hey, if you pay off this loan first and then this loan and then this loan, making the minimum payments on the other ones, and you might want to consider refinancing to a lower interest rate. So we pull all that information and help you kind of walk through what's the best strategy for paying off your student loan. And so that's how you would save money. So again, that was the solution that we offered, was we help you understand, track, and save when it comes to your student loans.
Awesome. I mean, now it completely makes sense to me, because I was a little bit confused about how is it solving or addressing that problem. I thought maybe you have some plans through which they can pay off their loans easily. But I think eventually, as you addressed, like the three things that you're solving, eventually they are being able to have that strategy through which they can pay off and be conscious and mindful about, how should they pay off. So that's great work, I believe. So, Blake, you built this company from scratch, I believe, with your co-founder. And I believe whenever you build a company, you put your heart and soul into it. And I believe that happened the same with you. So, why come that you just sold the company to somebody else and then you had to take an exit in that? Like, this is something which I on which I have like two kind of opinions. One is that you might be a little rigid with not selling your company in this way, and in the other one you might be having a hefty amount that you will get paid in return of that, and you may be interested into that as well. So what was your calling on that? Because I'm completely kind of naive in this area, so to say. Yeah.
Yeah, no, that's a great question, and it was a really, really tough decision. When we were going through the acquisition process, it was a very, very long process, several months of negotiations and
Right.
figuring out kind of how all the pieces were going to fall into place. I think we just felt at peace about it. We kind of understood that, hey, this was an opportunity that we were going to be able to exit our first startup while also being able to pay back our investors. And it was one of those things where we were at a fork in the road where we either needed to raise more capital to accelerate
I
the business to take it to the next level, or we would needed to start looking for an exit. And it just so happened that kind of right at that moment, we got approached by Ramsey Solutions. They kind of reached out to us and mentioned, hey, it looks like the product that you guys are building is very similar to some of the stuff that we're building. We'd love to have a conversation with you. And then from there, the rest is kind of history.
All right. And is that a particular solution is still there in the market in some form, or like what is the current state of that?
No, so whenever we got acquired, they absorbed the product kind of in different ways into their
Okay.
different products. And so unfortunately, it doesn't still live, which kind of hurts. But at the same time, I see bits and pieces of it in different products that they offer.
I see. All right. And what is the main interest of that company to acquire any startup in that way? What is the main purpose, according to you, for Ramsey in this example, to get that acquiring partner?
Yeah, well, one of the things that you kind of see today is a lot of times companies will acquire smaller startups like APay
Yeah.
when they
Yeah.
start to acquire a little bit of traction, and there is an overlap in the type of customers that
Okay.
we're attracting. So a lot of the people that used APay were also using Ramsey solution products, and
Mhm.
and it was one of those things where it just kind of made sense. Hey, they wanted to be able to acquire our team, so me and my co-founder, and kind of bring on our skill set to their team. And then the second part of it was, we had tons of users that was a perfect kind of like target market for them as well. So
Okay, all right. And this is sort of a controversial question. I don't expect you to answer this like it's your call. But basically, how does this happen? Like, what is the, that acquiring figure, so to say, like in terms of, you can give a range of it maybe or something like that, just to give a gist of what actually gets, what actually the founder gets at the end of that acquiring process.
what I'm sorry, what's the process like? Or
Like not just a process, I'm talking about what is the value of like return in that when let your company get acquired by any big company.
Oh yeah, and that's another good question. I mean, a lot of that comes down to what the terms of the acquisition looks like.
Okay.
Yeah, and so one of the things that we kind of walked through the negotiation was like, hey, how much are we going to get in cash? How much are we going to get that will translate to our salaries?
Yeah.
And then obviously being able to pay back investors, that's like the number one priority. And so from a valuation standpoint, we raised like $75,000 on the front end from a few angel investors. And let me put it this way: we were able pay them all back. So
That's awesome.
yeah.
Okay, that was quite a short answer. All right, I'll move on to my next questions on that. So, what are your plans today? Like with Ramsey, for example, are you looking forward to build something again, just like you were talking about Get Compound? I think I find you a lot more active on Twitter with the Compound application. So, what's that, and what's cooking?
Oh, thank you for asking me. I absolutely love working on Compound Journal. It's a side project that I tweet about all the time. So if you want to follow me on Twitter, you'll probably see that most of the time. But basically, yeah, while I'm here at Ramsey Solutions, started Compound Journal on the side. And the idea with Compound Journal is that is a very, very simplistic end of day journaling app. And I will note that it is a paid app. The reason why we made it paid instead of free is because it is a sort of a side project. That, you know, if
Right.
we get a few users out there that would find it valuable enough to pay for it, that's a win, right?
Yeah.
But the idea there was that it's an end of day journaling app that really takes you through 3 steps. It asks you how your day was. So, hey, how'd you feel today? And then it asks you, what did you do today? So the activities that you did that day. And then it gives you a journal, an opportunity to journal at the end. When we
Right.
first launched the app, we actually only had one journal prompt. And that journal prompt was, if you could redo today, what would you do differently? And I absolutely love that journal prompt because it really leaned into the entrepreneurial community that I was involved with. Because we get through so many days where it can be lonely as an entrepreneur, right?
True.
You don't have
True.
a lot of people asking you like, "Hey, how are you doing? Like, are you doing okay? Are you,
That's so true.
you
Yeah.
know?" And it feels like you do a lot of stuff throughout the day, and then when you get to the end of the day, you don't even have time to reflect on your day. And
Right.
so one of the things that we kind of thought was like, hey, if we could build an application that was an end of day journaling app that said, hey, if you could redo today, what would you do? And it sort of stirs on just a simple moment of reflection. And
Right.
it's been a beautiful thing. I have people that will email me, and it's kind of, you know, sometimes weird, but people will say, hey, yesterday or last week I journaled that I wish I was drinking more water, and now I'm drinking more water.
That's awesome.
Yeah, but then we also have people that say stuff like, you know, because of your application, I've decided to, or because of the journaling app, I've decided to, you know, get out of a toxic relationship, or I've decided to, you know, change careers, or I've decided to. So there's just a lot of really cool experiences that come from building Compound Journal.
That's awesome. Even I have been your user, and I really loved the user experience of your application. I mean, it, as I said before, like before starting this podcast as well, that it kind of fulfills the purpose of your idea, and it with a great user experience. So overall, as you said, like you have a subscription model to it. I think that makes sense. It deserves to have that subscription model in place. And yeah, good luck with the Compound Journal over there. So, Blake, I would like to ask you that, again, like when you started off Compound Journal, you might be having 4 ideas, different ideas that you wanted to try out. And like it might be the case, I'm just assuming. So, but first of all, was that the case? So that I can proceed with my follow-up question on that.
What was your question? Like, what other ideas are kind of
Like,
thinking
did
about?
you have like 4 other ideas out of which you chose Compound, or you had only this idea which you thought, okay, let's try, with your co-founder?
No, I mean, I think ideas are one of those things that are just, you know, they say it's a dime a dozen, right? There's just so many ideas. It really comes down to like the execution part of it. But no, it's the journaling app was something that, again, going back to whenever I was a founder, one of the things that I just kind of struggled with was that I would go through an entire day, right?
Right.
And you know, sometimes I would wake up early and go to bed at 2 or 3 o'clock in the morning, and I never had that time to really slow down and reflect on my day and like ask myself, hey, like, how are you doing, Blake? Like, are you sleeping well? Are you getting enough rest? Are you drinking enough water? Just like
Right.
the basics, right? and I found like building this application was something that I needed like for myself. And so it was a cool thing. But no, I have a ton of ideas. This was just one of them.
Okay, then we are on a common page. I thought maybe you have that much clarity where you have only one idea and you kind of execute that only. So I kind of got it now. Awesome. So like, tell me some traits of a good entrepreneur, because you have been one. That's why I can ask you this question. Uh, what are the traits according to you for anyone to be a good entrepreneur? Because in today's time, many people are kind of pursuing entrepreneurship, but not many people are that successful with their entrepreneurship journey, and some people left it in between as well when they see a lot of failures. Because I think that's also a part of being an entrepreneur. It's not always necessary that you will find success in the very first go. Maybe it will take some years, maybe months or years, to get through that one thing that you wanted to do from the very beginning. So, would you like to highlight on that and try to, tell us more about what is a good entrepreneur according to you?
Oh man, that's a tough question because there's a lot of different variations of what it means to be a good entrepreneur, right? And it depends on where you're at in life, right? If you have a family, or if you're single, or if you're younger, if you're older. I mean, there's just so many variables that come into play that really kind of define what that might look like for each and every person. I will say though, kind of to your point, there is a bit of discipline and determination that is involved.
Mhm.
I'm not really big on motivation. A lot of people are like, "Oh, you got to find like what it is that motivates you."
Okay,
I fundamentally believe that motivation kind of comes and goes,
that's
right?
true.
But discipline and determination is something that is
Same with you.
more about your character, right?
Right.
Um, and then as far as like from like a tactical standpoint, when it comes to entrepreneurship, you've probably heard this before, but you want to hold the problem really tight and the solution really loose. And what I mean
Right.
by that is that if you're going after a problem, you should feel a strong conviction that this is the thing that you are called to go after. And
Right.
for me, it was, I felt like everything inside of me that I was called to focus on this problem with student loans. And part of that was
Right.
my background, right? I came from banking. I worked in technology. So it made sense that I would go after that problem. But
Right.
the solution could be 100 different things, right? And so a good entrepreneur will understand that they hold the problem with very strong conviction, but the solution could be A, B, or C. And
Oh,
my job as an entrepreneur is to go out and do customer discovery, is to
right.
interview potential users, to create rapid prototypes. And so that solution could be A, B, C, D, whatever it may be. So again, one of the things that I'm always concerned with if I'm ever interested in investing in a startup myself
Mm-hmm.
is I try to get an understanding if they're passionate about the problem and they're flexible on the solution. Because I want to see a startup team that is rapidly iterating and that is very much focused on experimentation and
Right.
will not get totally hung up on like, hey, this is the solution and we're going to stick with it until, it succeeds. So that's the one thing I'll kind of highlight.
I can completely relate to that because in last 1 year with Swift and Time itself, we have figured that we knew what we want to do, and in between that, like almost been 1 year, like about to be 1 year in August mid, that we started off actually working on the operations of it, and I can look back and see that we tried a lot of different things on the way. Some things worked, some things didn't work, but the things that didn't work gave us a learning that okay, you can learn this from this experience, and then you can make it better maybe next time in this way. So overall it was a journey where we learned how to execute it out, because we already knew that there are a lot of different ways to get that done. As you said that you have to be flexible about what you are trying to do as a solution, like implementing as a solution, because there may be like two, three ways, or maybe n number of ways to tackle the same problem. So when you see those two, three ways, or n number of ways in front of you, it's your call as to how you want to go about it. Which one solution would you like to stick with first, and see it in time that if that solution is working for you, then go ahead. If that solution is not working for you, then change your strategy and work on the other one. Like, don't be very, don't just stuck on that one solution which is not working for you and say that, okay, why is it not working for me? I think it's important to understand that you have to very quickly shift the gears in that way, so that the whole team's morale is up, because I think the whole team's morale depends on the leader itself. If the leader is feeling is stuck with something, then I don't think that the team will be able to come up with something which is positive in that way. So I think we have at least cracked this down, that we know how to get that goal and how to go about it. We haven't reached that point yet where we can say, okay, now we are good with what we want to do. But I think we are on the right track if we look back and see that whatever decisions we took in the last 1 year. So yeah, I think that's a little bit about my experience too. But yeah, so that, like, currently I can relate with your learnings on it. So that's why I was just looking back at what I have done in last 1 year. Awesome. So also, Blake, there are like terms like market fit, idea market fit, and all of those things. What is this like? How can somebody get to know that their idea is market fit? Because there are sometimes, like, you your friends tell you some ideas which you think that, okay, might be this idea is might be good or might be not. Like, sometimes I feel personally when I hear the ideas from some of my friends that I don't think that this is going to work. This is just your imagination that, okay, this is a problem and we are going to solve it. Uh, so I think this term comes over there, like product market fit, if that product is actually having a market or not, right?
Mm-hmm.
So how to make sure that you have a product fit idea? How do we go about it?
That's a really good question. It's one of those like things that you can kind of say it out loud, but until you really experience it, it's really hard to put your finger on what it truly means to have product market fit. There's a lot of different ways that you can go about measuring this, and I would say that some of those ways that you might measure it could be effective in communicating whether or not you have truly reached product market fit.
Right.
But I think I've heard like the best way to really understand is that you'll see people do stuff like ask their user base, like, if our product didn't exist, how would you feel about it? And that's a good first, like, kind of indication. It's really hard to email your whole entire customer base and say, hey, if our product didn't exist, how would you feel about that? But it's one of the things that you can do. Another thing that is more of an organic way of determining if you have product market fit is from the beginning, build in natural feedback loops into the product as well. You want to give your customer or your user as many opportunities to give you feedback as possible, right? And that feedback might come through looking at a mixed panel report, or that feedback might come through them submitting, a form where they say like, hey, this is great, or this is terrible, or whatever it may be. But one of the things that I find to be really interesting, especially if you are a D2C product, if you're a direct to consumer product, is building in the ability for others to share your product, and then tracking whether or not they do that. So like, for example, in Compound, if you go to the menu screen, you can press this little button that says share with a friend or something like that. And what you'll start to see is that if people are really enjoying your product, they'll start to share it with other people, right?
Absolutely.
And so that's kind of something that I encourage people to do if they're building out an app. Always give your users the ability to share it. And even more so, like, if you are trying to raise money and you're able to say like, hey, we acquire 50% of our users by referrals, that is huge leverage when it comes to demonstrating that you have product market fit. And when you have product market fit, at that point, when you're raising investment dollars, really what you're doing is throwing like gasoline on a fire at that point. So,
Right. That's okay. That's great. And once somebody comes out of this product fit part, like this phase of product fit, and getting to test their idea, the next question that comes to their mind is, should we go for investing or should we go for bootstrap? So what should be those parameters on the basis of which somebody should make that decision?
again, that really comes down to what are your goals, right? As a business,
Right.
I think I talk to, I don't know, 5 or 6 people a week regarding, projects that they're working on or businesses that they want to start. And sometimes I talk to people and they're like, I really would just like to do this and make, $5,000 to $10,000 a month. And I say to them, do not raise money. Do not raise money. You don't want to give away your business and have other people telling you what to do. If your goal is to really just make a living for yourself and for your family, don't raise money. But hey, if you want to grow this idea or this product into a large business or a mid-sized business where you have more employees and you're expanding and you're growing,
Right.
in that case, yeah, you might want to consider what it looks like to raise money. So.
And today, these days, you will find that even with India, I'm talking this, that whenever you see any startup, be it in the SaaS business or some other direct product business, where maybe their idea revolves around groceries or anything like fast delivery or anything like that, you will generally find that all of them are getting the initial funding, and based on that, they start to run their company. They start to hire a lot of people in their team. Though their economics doesn't look good in terms of their revenue, annually, but still you would find that a lot of companies are taking investor money these days to just start off with their very first startup. So, and also you would find that today, like, there is that period where people are talking about recession. There people are talking about prices going high and everything. Whereas back in 2020, when the pandemic just started off, we saw a wave of startups coming into the space, like a lot of different spaces, and they kind of bloomed in last 2 years, I believe. So what really happened in that scenario, and how do you look at it as an entrepreneur?
Yeah, it's tough to really make much sense of it. Honestly, you were seeing almost every startup. I say every startup, but tons of startups that were getting funding for basically just having an idea.
Yeah.
Right. And it created this like fear in like the minds of a lot of entrepreneurs that they like, oh, I have to raise funding because everybody is raising funding.
Yeah.
Everybody's raising money. And, we're kind of seeing now 12 months, 18 months later that a lot of those startups are kind of, falling flat, right? Because they raised at such high valuations and they weren't really able to deliver on the solution that they were trying to go after, the problem they were trying to go after. And so, what I would say is just don't try to over romanticize what it means to raise money. A lot of young entrepreneurs will come to me and they don't have a product, they don't have any customers, and they're like, oh, I just need to raise money. I just need to raise money. And I said, no, you have way more problems than raising money. You just have an idea at this point. And, all of the things that we kind of read on the news or on Twitter, social media, whatever it may be from the past 18 months, we're starting to kind of see that level out, right? We're not seeing so many startups that are raising money simply off of an idea.
That's true.
So yeah, it's an interesting time.
Of this startup named Fast, if I remember it right, and it had to kind of shut off their operations and had to lay off all of their team. So it happened, I think, some months before that they had to shut down their operations. But yes, like these days we are hearing these news very frequently. Somewhere in Europe or maybe in US, even in India, you'll find that layoffs are going on, and people talk about unit economics at that point of time. So what do you think about unit economics? Like, can you simplify what is that? Because like a lot of entrepreneurs talk about, you should take care of your unit economics, because that is what is going to save you in these times where you'll find like there is high inflation, investors are not, trusting the companies that much at this point of time. So what is that? Like, if somebody is an entrepreneur and want to be an entrepreneur, why should they take care of it, and what is it exactly?
Yeah, that's a great question. And the way you kind of simplify unit economics is really just breaking down the various parts of your business. And if it's hardware where you're delivering like an actual physical product, the unit economics of that is all of the little things that go into making up the entirety of the product, right? And so if one aspect of your unit economics is off, then it can throw off your entire business, right? And the same thing applies for digital products as well. When you think of unit economics, you're kind of basically just looking at each and every part that goes into building your product. And so that might be things like marketing, that could be salaries, that could be just a variety that research and development, R&D. It could be a variety of different things. And basically what you're looking at is how are you fine tuning each of those different aspects that go into making the product or making the service, right? And a lot of times you see that kind of played out in like stuff like the cost to acquire a customer, your CAC, right?
Yeah.
Or you see this in different marketing terms like customer acquisitions or cost per click or whatever it may be. And really, those are just different dynamics of your unit economics, right? And that's when I go back to product market fit. When you start to achieve product market fit, then really what that translates into is that you're able to start seeing how the different aspects within your business are starting to line up. So the unit economics makes sense, right?
True.
And when those type of things are working out effectively, that's honestly when you go raise money.
Yeah.
Yeah.
Makes sense. And like, how can somebody take a track of, now that my model is working out and I'm seeing some progress with it, like what is the right time? Again, I mean, this is very subjective, right? But what is the right time for them who have done all of this, who have proved their model to themselves and to the market, and they are making some revenue now? Mm-hmm. So is that the right time if they actually want to raise the investment, or should they go like until that last point where they feel like, okay, now we actually need it because the financials are not good and we have to, raise some funding round now?
Yeah, that's a great question. And really it's kind of to your point, it's understanding your why. Like why am I raising? Because that's what an investor is going to ask you, right?
Yeah.
And a lot of times what you hear young entrepreneurs say is like, oh, I'm raising money because I need more developers. That's not your why, right? Why do you need more developers? Well, we need more developers because our customers are growing at such a rapid pace, and they're requesting more features, and they're requesting this or requesting that. Or hey, we need more developers because we've identified another segment of our audience that we're going to be able to provide a solution for that's going to open up X amount of dollars of revenue. So that's our why. But see, the problem is that a lot of young entrepreneurs will say, I need to raise money for more developers. And then an investor hears that and they say, well, that doesn't tell me anything.
Yes.
Are you just simply looking to hire more people? But what I want to know is that if I'm going to give you dollars, the reason why I'm giving you dollars is because you're going out and solving a problem, or there's an opportunity that's going to make, my money more money, right? And so what it comes down to is whenever I hear people that say, hey, when's the right time to raise money? My first question is like, why do you want to raise money? Right. And then I want to hear kind of what they're thinking.
Because if they don't have a reasoning behind that, then nobody's going to give their money. Like, That complete, like, I mean, this is this simple to understand that if you don't have the why of getting the investment or even starting a business, then I think everything is eventually like comes back to the void. So yeah, all right. And when we were talking about CAG, like customer acquisition cost, I would say. So can a startup replace that with more marketing and maybe, because these days digital marketing is very strong, right?
Hmm.
You, if you have a YouTube channel and if you have a good reach on that YouTube channel or maybe some other platforms as well, I think that customer acquisition cost can be tackled through that because you are reaching out to the customers through your channel, and this is how you can find a balance between the customer acquisition cost and your products cost. So, what do you think like about this? Because I think it can be replaced if you have a good presence online and you can reach to your customers directly yourself without even putting in money into that. What do you think?
Yeah, that's a fantastic. And here's the thing. I'm honestly, I wish I was a stronger marketer. If I was, maybe our businesses would have been wildly more successful. So I'm
Right.
probably not the best person to talk with you about different aspects of marketing. But I will say, when it comes to the cost that's associated with acquiring a customer, I mean, that's one of those things that if you're able to fine tune that formula, that
Yeah.
model, when
Yeah.
you take that to an investor, that sometimes has such significant leverage because at that point it becomes a numbers game, right?
Right.
If I tell you, hey, if you tell me, hey Blake, um, it costs me $1 to acquire a new customer for Swift Anytime,
Yeah.
and I said it cost you $1 to acquire, and then I said, what's the LTV? What's the lifetime value? And you said,
Yeah.
well, for every $1, I make $5. So you know what I would instantly do if I was an investor? I would give you as much money as possible because I know that you're taking $1 and turning it into $5. And
Right.
so that's where that customer acquisition cost, that CAC, that's where it really becomes valuable.
Right.
If you can get to a place where you're saying, hey, for every 100 customers that we get, it cost us, $50, 50 USD, whatever. That's where those mathematics and that number really start to, because then, like I said, you can take it and say, for every one customer we make $10, and that's the
Right.
LTV, that's that lifetime value. And if you can show that to an investor, there's hardly any investors in this world that um, if you have a reasonable market size, uh,
Right.
then they would say, if you can turn $1 into $10, then
Go for it.
I do that every day.
I see. Okay, this is that important. And I mean, I am amused by that because, with Swift and IM, we are not getting into that CAC thing where we are putting money into getting the customers and then converting them into, buying something from us. I think it's very organic. Even the traffic of our platform is like more than half of it is organic and rest of it is the distribution that we do. And I think we are on the right place when it comes to getting the customers at least aware about our brand and aware about what we are providing to them. So yeah, thanks so much for your insights on that because I think that's going to help me as well. So yeah, awesome. I think I am almost good with my questions, Blake. But I would like to ask you one more question, which is more of like a rapid fire kind of question. So the question is, if not entrepreneurship, then what?
If what?
If not entrepreneurship, then what?
If not entrepreneurship, then what? That's a great question. Oh man. Um, I don't know. I love basketball. I would be a basketball player if I could magically become taller, maybe.
Okay, fair enough, fair enough. And what advice would you like to give your 18-year-old self if you have to just, whisper in his ear?
Yeah, I would say 18-year-old Blake, I wish he would have started studying computer science earlier,
I
and
see. Okay.
and reading more books. There are so many good books out there, and if I could recommend a book to your audience,
Yeah, please.
it is a product book. So again, I work as a product manager now,
Right.
but it's called Continuous Discovery Habits by Teresa Torres, and
Okay.
it is a fantastic book. If you could include it in the show notes, I would definitely do that.
I'll do that. Awesome. So, any last advice for our audience? Any last thoughts that you have?
No, I appreciate you having me on your show. It is such a privilege and honor to talk with you. I frequently visit Swift Anytime, and it is just the most beautiful site. You've done such a great
Thank you
job,
so much.
and you're
Thank
continuing
you.
to put good content out there. Yeah, I'm impressed, man.
Thank you so much. I mean, that means a lot, coming this from your side. So again, a big thanks to you for the support that you show even on the social media, to be it Swift Anytime or to be to my content that I put out like personally. So thanks for that. And I really enjoyed this conversation. I think today I had like the whole conversation revolved around entrepreneurship, I believe, and all of those questions were not, I don't know like if the audience is interested in that questions or not, but I believe that if somebody is an entrepreneur and want to be an entrepreneur, these are some questions that comes to somebody's mind, because this is what was coming to my head when I was thinking about the difficulties, or what can be the possibilities in this space, and what kind of journey is there for any entrepreneur, a new entrepreneur, to start off with their very first company. So thank you so much for answering all of them, Blake. And I believe that we will be making one more podcast maybe after this, where I'll be getting into more details of it. Maybe I didn't touch upon a lot of things, and I figured out maybe after this conversation that okay, I think I should have asked him as this one as well. So I'll make a list of them, and I'll ask you again if you will be ready and if you will be available. Then I think we will be. I will be at least more than happy to have one more conversation with you regarding this.
That sounds great, man.
All right, looking forward to more such conversations. So, on that note, guys, thank you so much for listening to our podcast today. If you enjoyed this, and please give it a big thumbs up. Follow Blake on Twitter. I'll link his Twitter profile in the description down below. And you can also follow me if you like. I will also provide my Twitter link in the description box as well. Till then, take care, bye bye, and Jai Hind.